Good evening, everyone. Stocks on Wall Street stabilized after a three-day sell-off, but in the oil market, prices tumbled. The price of crude posted the biggest one-day drop in nearly 2 years. On the same day, the International Energy Agency once again lowered its global demand forecast for next year. So if you want to understand the impact of a weak global economy, just look at these oil prices. Domestic crude fell over 4%, closing below $82 a barrel for the first time since 2012. Brent crude, the global benchmark for oil, also fell almost $4 a barrel, closing at the lowest level since 2010. Tyler?
All right, so why is oil moving down so far so fast? What's next for crude, for consumers, and for investors who own oil-related shares? Here with Insight is John Kilduff. He's founding partner with Again Capital. You again, I say it right?
I'm back. I'm live.
Nice to have you here. Very simply stated, why are prices falling as much as they are, as fast as they are?
It's a 1-2 punch, Tyler. Part of it is this slowing economy in Europe and in China, where demand for oil is key. But the other part of it is that the wheels are coming off OPEC. There's a battle for market share. They're looking at the price and staring into the abyss and saying, we're going to keep pumping and we're going to fight for market share. This is the Saudis saying this. This is the Kuwaitis saying this. And this is the Iranians saying this, interestingly enough. So this is combining to put tremendous downward pressure.
Where in the past they might have cut production.
In the past, just last year, the Saudis cut back oil production about 1 million barrels a day. They're not doing it this time around, and I think it's because they want to send a warning shot to Russia and Iran for what they're doing in Syria, but also to U.S. producers. The shale miracle that we've been experiencing, big part of this, and the Canadian tar sands, and the Saudis are drawing a line in the tar sands saying, you know what, we can produce much cheaper than you. Let's see how long you can hold on.
So, John, you're on record saying that you see oil prices going down another $10, so into the $80, high 70 range. Will that help or hurt businesses and the consumer?
It's fantastic for businesses, for transportation companies. It's wonderful for the consumer. Just like when these gasoline prices spike, it hurts consumer confidence. People buckle under and sort of, just stay home and staycation. They'll be hitting the road now, and it's coming just in time for the holiday shopping season where these extra dollars will be spent at the mall. It's incredibly stimulus. Now, people will get nervous that these falling oil prices are because of a slowing economy and a recession, but I got to tell you, the real big part of this story is the surging production, not the slowing economy.
I want you to elaborate on the point you just made. You say this is a shot across the bow by the likes of the Saudis and others to U.S. oil producers in the shale sands in North Dakota, up in the Canadian oil sands, saying, you can't keep up with us as we drive the price down. You can't get it out of the ground profitably enough.
That's right. Bit of a history lesson here, Tyler. The Saudis did this very thing back in 1998 when Venezuela was making a move on the U.S. to get market share here and to sell more of their oil here at the expense of the Saudis. Saudis taught them an expensive lesson, got oil back down below $10 a barrel. Same thing here. I think the Saudis saw their U.S.-bound exports fall to the lowest level in years. We're not importing any more West African crude right now, so that's Nigeria, that's Libya. So this is they're worried. So they're fighting for market share, so they're saying we're going to try to drive you out of business.
So OPEC, the oil cartel, has a big important meeting next month, November. What headline might we expect from there?
I think the big headline is going to be that they are going to try to stand their ground and not cut production. Funny how history repeats itself. The same thing happened back about in 1993, to go way back. On Thanksgiving Day, they didn't cut. Oil prices collapsed.
Very quick thought on the oil stocks, the big integrated oils, the oil services company, the exploration and producers. What's going to happen to their shares?
You have to stay away. This oil price, the way it's going, Tyler, could put them under. Could potentially, some of them are very highly leveraged, a lot of borrowing. Their borrowing base is going to be eroded because of this low oil price. You have to stay away from it and get out.
John, thank you very much.
Thanks.
John Kilduff with Again Capital.